Is the SBI Life Smart Scholar Plus the flexible and comprehensive solution you are looking for to secure your child's future? This video explores the features, benefits, drawbacks, and potential returns of SBI Life Smart Scholar Plus plan. Since planning for your child's future can often be influenced by emotions, this review will guide you to make informed decisions, avoiding emotionally driven choices. Welcome to holisticinvestment.in. SBI Life Smart Scholar Plus is an individual unit-linked non-participating life insurance savings product. We shall look at the main features first. The plan is designed for parents with children aged 0 to 17 years. Inbuilt premium payer waiver benefit ensures the policy continues in unforeseen circumstances. It offers enhanced wealth creation through 10 diverse fund options. It includes accidental death and accidental total and permanent disability benefits. Loyalty additions increase your fund value over time. Liquidity is available through partial withdrawals. Next, we shall look at the benefits of the plan. First, death benefit. A lump sum benefit equal to the higher of sum assured or 105% of total premiums paid up to the date of death will be payable. All the future premiums due are waived and the policy shall continue to be in force and fund value will be payable at maturity. In the event of death of the child, no sum assured is payable. Life assured can either continue the policy or terminate the contract. Next, maturity benefit. On completion of the policy term, maturity benefit, that is the fund value, shall be paid to the beneficiary in a lump sum. The beneficiary will be either the policyholder if he or she survives, or the child in case of death of the life assured during the policy term. Next, we shall look at the fund options in SBI Life Smart Scholar Plus. You have the option to invest in any one or a combination of funds listed here in multiples of 1%. Each fund has a unique asset allocation with varying levels of risk depending on the allocation. Select the fund that best matches your risk tolerance and financial goals. Next, let us move on to the charges under the plan. Premium allocation charge. This charge shall be deducted from premiums at the time of the receipt of such premium. For single pay policy, it is levied only once, and for limited and regular pay policies, it is levied in the first 10 years. Next, policy administration charge. A monthly policy administration charge of ₹50 per month for single pay policies and ₹75 per month for regular and limited pay policies shall be deducted. Next, fund management charges. It depends on the fund chosen. It ranges between 1.35% and 0.25%. Next, discontinuous charges. It is calculated based on the percentage of single premium or fund value. It varies according to the year of discontinuance. Next, mortality charges. Mortality charges are deducted each policy month from fund value by way of cancellation of units. This is charged based on your age and sum at risk. Premium payer waiver benefit charge. This is not applicable to single premium policies and reduced paid up policies. It is recovered every month. Next, accident benefit charge. This charge is recovered on a monthly basis. This is not applicable for single premium policies. Switching charge. A charge of ₹100 is applicable for every switch in excess of 2 free switches in the same policy year during the policy term. Next, premium redirection charge. A charge of ₹100 is applicable for every redirection in excess of 1 free redirection in the same policy year. Next, partial withdrawal charge. A charge of ₹100 is applicable for every partial withdrawal in excess of 1 free partial withdrawal in the same policy year. Inference from these charges. Your premium is not fully invested in the chosen fund. It is only after deducting various charges that the remaining amount is invested. Unlike other market-linked products, this SBI Life Smart Scholar Plus plan includes multiple types of charges, which over time gradually reduces the overall returns. Next, we shall discuss the advantages and disadvantages of SBI Life Smart Scholar Plus plan. First, advantages. Accidental death benefit and premium payer waiver benefit are automatically included in the regular and limited pay policies. 2 free switches, 1 free premium redirection and 1 free partial withdrawal are allowed per policy year. Tax benefits apply to both the premiums paid and the benefits received. Next, disadvantages. High charges significantly reduces the potential returns. The sum assured may be insufficient to cover the family's future financial needs. The plan has a 5-year lock-in period. Loan facility is not available under the plan. Next, we shall analyze the returns. Before making any investment, it is crucial to assess the potential returns to avoid emotionally driven decisions. Estimating the returns provides better clarity on the plan's effectiveness. The potential returns of SBI Life Smart Scholar Plus should be compared with other investment options. Let's calculate the IRR based on the figures provided in the policy brochure. A 35-year-old male purchases SBI Life Smart Scholar Plus plan with a sum assured of Rs 10 lakhs. The policy term and the premium paying term are both 20 years with an annual premium of Rs 1 lakh. At the end of the policy term, the fund value is receivable. The following fund values are for illustrative purposes only, and the assumed returns of 4% per annum and 8% per annum are not guaranteed, nor do they represent the maximum or minimum returns. At a 4% return scenario, the fund value is 23.69 lakhs, providing an internal rate of return of 1.59%, which is lower than a standard savings account interest rate. At an 8% return scenario, the fund value is 37.38 lakhs with an IRR of 5.64%, which is less than what you would have earned from a fixed deposit. Although the SBI Life Smart Scholar Plus is a long-term investment over 20 years, its returns do not outpace inflation, leading to a shortfall in the required corpus. Consequently, this plan may not be the best option for achieving your financial goals for your children. A comparison with other investments provide deeper insights. Let's evaluate an alternate approach using the same metrics from the previous illustration. While SBI Life Smart Scholar Plus offers both life cover and market-linked investment opportunities, we will explore the efficiency of separating insurance and investment. For a pure term life insurance policy with a sum assured of Rs 10 lakhs, the premium would be 5,500 annually over a 20-year term. The remaining 94,500 can be invested based on your risk tolerance. High-risk investors may opt for equity, while low-risk investors may prefer debt instruments. We will compare two scenarios, ELSS for equity and PPF for debt. At the end of 20 years, the maturity value in PPF account would be 41.94 lakhs, resulting in an IRR of 6.62%. Even though PPF is a debt instrument, it delivers higher returns compared to the market-linked SBI Life Smart Scholar Plus. For the ELSS investment, after accounting for capital gains tax, the post-tax fund value at the end of 20 years would be 69.24 lakhs with a pre-tax value of 76.26 lakhs. This results in an IRR of 10.77%, which is a post-tax return. Both these alternative strategies offer IRRs that exceed inflation while also providing greater liquidity. In contrast, the potential returns of SBI Life Smart Scholar Plus are not in proportion to the risk taken. The plan's limited life cover and subpar returns make it less suitable for long-term wealth creation. We have reached the end part of our analysis. Here is our final verdict on SBI Life Smart Scholar Plus plan. It offers a life cover along with a market-linked investment opportunity. While market-linked products inherently carry risk, investors typically expect higher returns to justify the risk. However, SBI Life Smart Scholar Plus plan falls short of delivering the desired alpha, making it less attractive for long-term investors. The multiple charges associated with this plan diminish overall returns, and the life cover provided is insufficient. As a result, the plan fails to fulfill both its insurance and investment objectives, making it unsuitable for achieving children-related financial goals. It is essential to ensure that you have adequate life insurance. Pure term policies offer substantial coverage at affordable premiums. With proper life cover in place, you can then focus on building your investment portfolio using your savings. Avoid making impulsive financial decisions, especially when planning for your children's future, as this can impact your financial journey in the long run. If you are unsure or need further clarity, seek professional advice. Consult a certified financial planner who can design an investment strategy tailored to your goals and financial situation before committing your hard-earned money. A detailed review of this plan is available as a blog post on our website, and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.